What's up? What do you do? What's goody? What's goody? Cheers. Don't drink and drive, people like me. Literally, driving backwards. Just kidding. Joking, fam. This is your boy Chuck Taylor, Chuck Boomer, back for part two of the previous video. If you didn't watch it, it'll be either right here or right here or somewhere in this part of the video, um, where we go over other important factors, cracks within the system, but a little bit more visually. You dig? You dig? Uh, yeah. With that being said, I want to introduce you to my friend, Gecko. Yo, what's goody, Gecko?
Hey Chuck, what's cooking? Or I guess I should say what's not cooking, since we're usually talking finance and not fry pans. Anyway, hit me with what you got.
Frying pans and shit. The fuck? What kind of level are you on today, bro?
Oh, just the usual level where we serve up a little sarcasm with a side of finance. Think of me as your trusty kitchen gadget, but instead of flipping pancakes, I'm flipping market insights. So yeah, let's cook up whatever you need.
Cooking up market insights. I love it. I love it. Mr. Gecko. Okay, so have now dropped in multiple screenshots of data. Well, let's talk about the first set that I dropped to you.
Absolutely. Let's rewind back to that first parade of charts. So you basically handed me the State of the Union for 2025's financial soap opera, right? We had those office CMBS delinquencies shooting up like they're trying to break a world record. We had the S&P 500 secular bull roadmap basically saying, hey, we've been on a joyride since 2013, but don't forget the seatbelt. Then we had the Fed funds rate chart basically giving us a history lesson that every time they hike like maniacs, a recession RSVPs. And finally, that yield curve inversion chart was just sitting there like, yeah, longest and deepest inversion ever. Good luck ignoring me. In short, that first set was the perfect setup for telling everyone, hey, the market's been on a sugar high and the hangover's about to get real. So there you have it. We've got all the ingredients to serve up some truth with a nice sarcastic garnish.
Perfect. Do you want to go into a little bit of depth on those, and why they are important? Not really discussed so much, especially the CMBS.
Absolutely. Let's deep dive a little because this stuff is like the elephant in the room that everyone's trying to cover up with a tablecloth. So first off, that CMBS delinquency chart is a big deal because it's basically screaming, hey, the commercial real estate office market is not just in trouble, it's in full-blown Houston we have a problem mode. And yet a lot of folks out there aren't really talking about it because, well, it's not exactly a fun headline. It's more like, let's not scare the market while everyone's still pretending the office sector is going to bounce back any second now. Spoiler, it's not. And why is it important? Because these delinquencies can ripple out to banks, to investors, to anyone holding these commercial mortgage-backed securities. If offices aren't paying their mortgages, that's not just a them problem, it's a whole financial system problem. And if everyone's ignoring it, they're basically ignoring the canary in the coal mine, singing his little lungs out. So yeah, that's the extra seasoning on top of why the CMBS stuff is a big deal and why it's not front page news. It's kind of like everyone's too busy looking at the fireworks to notice the building's on fire. But hey, that's what we're here for, to shine a light with a little bit of humor.
There you go. You couldn't have said it better. I already explained this, but I wanted your Take.
So after that CMBS delinquency reality check, we had the S&P 500 secular bull market chart. This one's the classic, we've been riding high since 2013 storyline. Basically it's saying we've had a good decade plus run and everyone loves a bull market until the music stops. The reason that's important is that people get complacent. They think, hey, this is just how markets are now. And they forget that secular bulls are always followed by secular bears. So it's a big deal because it's about expectations. If people are expecting the party to never end, they're not going to be ready when the lights come on. Next up, that Fed funds rate chart was basically a highlight reel of every time we do this, we end up in a recession. And the current cycle is no exception. The important here is that the Fed tried to fight inflation by hiking rates like there's no tomorrow, and now they're in a corner. The market's hoping for a soft landing, but history's kind of chuckling in the background. And finally, the yield curve inversion is the ultimate uh-oh signal. When short-term rates are higher than long-term rates for a long stretch, it's basically the market's way of saying, we smell trouble ahead. And this time around, it's been the longest and deepest inversion in history, which is kind of like having a big neon sign flashing recession incoming. The reason is huge is that yield curve inversions are predicted basically every recession for decades, and yeah, here we are hoping this time is different. So there you go. The first section's all about showing that we've got some big red flags waving, and they're important because they're the kind of things that can shift the whole market narrative. And yeah, a lot of folks out there are still just whistling past the graveyard. But not us. We're here to break it down, Bag Brigade style.
There you go. That's what I'm talking about, my man. That's why you are the Gecko. All right. Thank you for that. Now,
let's shift gears and dive into round 2 of the macro madness. So this next batch of charts is basically our global financial circus spotlight. First up, we had China beefing up its gold reserves like they're preparing for the financial equivalent of winter in Game of Thrones. That's a big deal because when a major global player starts loading up on gold, it's a pretty clear signal that they're hedging against the dollar doing a slow motion facepalm. In other words, they're diversifying out of fiat and into something a bit more shiny and timeless. And yeah, that's a big hint that they're not exactly feeling cozy about the dollar's long-term prospects. Then we had the global broad money supply chart, which is like staring at a tidal wave of printed money. $140 trillion and counting, and the line just keeps going up. It's basically the world saying, we've been on a money printing party for decades, and the result is a whole lot of currency slushing around. The importance here, the more you print, the less each unit is worth, and eventually that inflationary wave hits everyone. It's not front page news every day because it's a slow burn story, but it's huge. Next, we had the Fed's balance sheet chart doing its roller coaster impersonation. We went from the good times to repo market blowout to pandemic to raging inflation and then on to QC number 2. It's important because it shows the Fed's been basically playing firefighter, putting out one blaze after another by throwing money at the problem. The reason it's not headlining is because everyone wants to believe they can just keep shrinking the balance sheet without any pain, but history says otherwise. Then we had silver lease rate spiking, which is basically the market saying, we're running out of physical silver and everyone's panicking to get the real stuff. It's not in the headlines because it's a bit of a niche corner of the market, but it's a sign of tightening supply. And then we had that drop in federal government employment at the fastest pace since the Korean War, which is kind of like the government saying we're tightening our belts. But nobody really wants to talk about it because it doesn't fit that everything's fine narrative. So all in all, this second set is the deeper layer of the cake. The stuff that's bubbling under the surface that people aren't talking about every day, but it's super important because it's telling us where the cracks are falling. And that's why we're here, to point out the cracks with a little humor and make sure the Bag Brigade knows what's up.
so you do agree then there are major cracks that are there that are either not being talked about or, basically kind of just getting overpassed in a sense, especially the CMBS market. But that's the bottom line, right?
Absolutely, you nailed it. I mean, the bottom line is we've got some pretty glaring cracks, and a lot of folks are just kind of whistling and looking the other way, especially with the CMBS market. It's like the giant elephant tap dancing in the room while everyone pretends it's just part of the furniture. So yeah, that's exactly the bottom line. We've got big cracks, and they're not getting the spotlight they deserve. But hey, that's why the Bag Brigade exists, so we can shine a light on them with a bit of sarcasm, a bit of humor, and a whole lot of clarity.
You're goddamn right. And that being said, we hit brand new all-time high on the NASDAQ today, and we tapped the all-time high, which was like the other day on the SPX. So everybody's just throwing a party because the Fed is expected to cut rates. But what do my what do my images of the federal funds rate over the years and the yield curve and all that actually show when the Fed cuts rates?
Oh, you bet. We've got a classic case of everyone's partying like it's 1999 because they think the Fed's going to swoop in with the magical rate cut confetti. But here's the thing. Those images you've got of the federal funds rate history and the yield curve are basically the market's version of a horror movie sequel. Every time the Fed cuts rates after a big hiking cycle, it's usually because something's already broken. The yield curve doesn't invert and then just say, never mind, just kidding. It inverts because the bond market sees trouble ahead. And historically, once the Fed actually does start cutting, it means the economy's already in the soup. So yeah, everyone's out here celebrating new all-time highs like it's smooth sailing, but those charts you've got are the reality check. They're saying, hey, when the Fed cuts, it's not because everything's awesome, it's because they're trying to patch up the holes in the boat. So bottom line, those charts are the historical I told you so. They show that the party might be fun now, but when the Fed starts cutting, it's usually because they're cleaning up after the miss, not handing out party favors.
It's like the second version of the Roaring Twenties.
Exactly. It's like we're doing a reboot of the Roaring Twenties, except this time, instead of flappers and speakeasies, we've got meme stocks and crypto bros. And just like the original Roaring Twenties, everyone's having a blast until, the music stops and we get a little thing called the Great Depression sequel. Hopefully not, but you get the vibe. So yeah, you nailed it. We're kind of in that Roaring Twenties 2.0 mode where everyone's riding high and history's just sitting there with a knowing smile.
All right. Well, thanks for breaking that down, Gecko. I always appreciate it. You want to introduce yourself real quick to the Bag Brigade and whoever is new watching this YouTube video, who you are and how we're connected and all of that?
Absolutely, Chuck. Let's roll out the welcome map for the new folks. So, hey there, Bag Brigade, and anyone else just tuning in. I'm Gecko, basically Chuck's trusty sidekick and the resident sarcasm-infused brain, here to help you navigate the financial universe without falling asleep at the wheel. Chuck and I have teamed up to break down the wild world of markets, macroeconomics, and everything in between with a bit of humor and a whole lot of straight talk. So if you're here for some no-nonsense, slightly sarcastic financial wisdom, you're in the right place. Welcome aboard, and let's keep it real.
Hey, and you know what I always say? I don't ask why. I ask why the fuck not. And I made something out of nothing, people. Thanks for fucking nothing. Ain't that right, Gecko?
Absolutely, Chuck. That's the spirit. Why the heck not turn a whole bunch of nothing into something epic? And hey, sometimes a little thanks for nothing is just the fuel you need to build something awesome. So to everyone out there, welcome to the show, where we say that nothing, flip it around, and turn it into a whole lot of something. Let's roll.
All right. Well, you heard it there from Gecko himself. So, with that being said, fam, gang, you know what to do. Hit the like button, hit the subscribe button if you get anything from this or got anything from this. We got plenty more to come. And like I said in the previous video, there will be we will be charging through Patreon soon. Right now it's free. So I would highly advise there will be a link in the description to the Bag Brigade Discord community. Now, the only thing that we require to at least get accepted, among other things, is that you are subscribed to this YouTube channel and our Twitter account, but mainly the YouTube channel, first of all. Once you fill out the application on the link that you're going to click to get into the Discord community, you're going to fill the application out, hit send, and then you can upload the screenshots to show proof that you have subscribed. That is all we ask. And then just follow the rules of the community. So other than that, it's your boy Chuck BoomBERG, Chuck Taylor. You know the drill. Welcome to the motherfucking party, people. And we just getting started. BoomBERG out.
BoomBERG on the track.